about stocks this week. Industrial output for June contracts nearly 2%. We'll find out if this could be the trigger the RBI needs to start cutting rates. SBI, IOC and Bharti Airtel post dismal earnings for the first quarter. We'll tell you if it's time to begin pulling your money out of these stocks. And later on the show, Hemang Jani tells us why United Phosphorus is an attractive investment option right now. You're watching All About Stocks on ET now. Thank you for tuning in. It's been another week of bad news for the markets. Disappointing quarterly numbers from a lot of big companies and bad IIP numbers to go with that as well. Remember, there's an email ID at the bottom of your screen where you can write to us and ask us any questions you might have about your stocks. On this show, we'll help you as retail investors figure out how to put together the best possible portfolio and how to guard your portfolio from the ongoing volatility. You can also reach our team on our Facebook page where we upload videos of the show. You can catch shows of the previous weeks as well. Now, before I bring in the guest on the show and ask him what's going on in the markets, my colleague Ajay is here with the latest numbers. Ajay, while you take us through what happened in the markets this week, also take us through those IIP numbers that disappointed the street so much.
Well, it was very surprising, Faye, to see how the markets actually went up close to 2% on the Sensex and Nifty. Climbing wall of worries, as they say, because of the FII flows have been very strong in Indian markets. And despite of weak earnings, some of the stocks are doing pretty well and that's attracting FII flows. So for the week, of course, the Sensex Nifty up 2% each. M&M got a fair bit of attraction from the market fraternity, up 7%, very strong set of numbers. Same was the case with HUL, which actually got the 500 rupee per share mark after several years. Reliance, of course, for its own issues, also surged about 6% this week after they agreed to share the records with the government for KGB6. Bharti Airtel, of course, was down very sharply, 5% on net basis on bad results. SBI was the same case. BOB, again, public sector banks are under pressure right now from the street. Ranbaxy was one odd company which lost. Of course, the big element of IIP was also released this week. It was a bad number, negative 1.8%. But there was a momentary reaction from the street, and then after that, expectations started building in that there's a even more promising case for rate cuts going ahead. And FIIs in the meantime are pumping money in the Indian market. So markets in a way brushed aside a negative IIP, which was mainly led by a very weak set of capital goods data coming in.
Right, Ajay, and more bad news came in from those large companies, Bharti Airtel, Indian Oil and SBI, all disappointed the streets. Can you take us through those quarterly numbers?
Well, Faye, the week gone by has definitely been a week of earnings disappointments from large index heavyweights, starting with the SBI. It was a weak number. The first quarter slippages went way beyond what the street was actually estimating, and also the gross and non-performing assets number surged. NIMs were under pressure. We saw brokerage downgrades coming in on SBI. The stock was down sharply when the results came out, and even prior to that, one day ahead of going into the numbers, the stock was down, and brokerages severely downgraded that. Some of the brokerages are also calling one of the worst quarters for SBI. The case was almost similar with Bharti. We saw the margins coming under pressure, almost 300 points lost as far as the margins are concerned. EBITDA was much lower. Target price being scaled down by some of the large brokerages like CLSA, and also there was semblance of FII selling for Bharti. We saw almost 15% lost in 2 days alone. Oil marketing companies also saw their fair bit of pressure coming in. IOC saw its loss at a record level this year round, and the chairman said that things are very worse right now. The gross refining margins were negative. The borrowing costs are actually going up. And they said that if the government doesn't release any cash compensation, things won't improve in a hurry.
Thanks, Ajay, for that information. Joining us now to help us understand all of that information and put it into perspective is Hemang Jani, the Senior Vice President at Sharekhan. Hemang, it's always a pleasure to have you on All About Stocks. Now, we know that the market has been getting a lot of bad news over the last couple of days, starting with those IIP numbers. Now, there's also a view that given the quarterly numbers we saw from a lot of manufacturing companies, that the IIP number might not be the best index to measure growth. Now, tell us how grim the picture really is on the ground in your opinion.
Yes, we believe that overall IIP numbers have been quite bad, and even for the quarter, if you see, we have seen a marginal 0.1% kind of a growth, and We believe that mainly it is the manufacturing sector and capital goods in particular which have taken a massive hit in terms of slowdown. But the only disconnect that I see is that when we look at the top companies' top line growth, it looks relatively better. So whatever slowdown we are seeing in terms of the IIP growth has some disconnect when we look at the top line performance of some of the companies in the Sensex.
And what's your view on those capital goods stocks? Would you recommend holding on to them?
We think that it will take a while for the entire space to revive because the order flow has actually dried up, and particularly companies which are dependent upon the import are getting butchered because of the way the rupee is showing volatility and is falling, and the overall investment sentiment is extremely bad. Some of the companies which have a much better diversification of projects, like for example L&T or to some extent BGR Energy, they are relatively better placed. There is something like a BHEL which has about 75 to 80% of the revenues coming in from power sector, and where the entire investment cycle has come to a halt, may not be able to do that well.
So if we look at it holistically, manufacturing is down, agriculture will suffer because of those lower monsoons. What about services? Do you think they're likely to grow less this year, reacting to the fact that the entire economy seems to be sluggish?
So given the fact that there is an overall slowdown and the rural segment in particular, which was doing so well and which had its own effect on the services sector, there is going to be some kind of effect on services also. So we believe that the growth there could be somewhere in the range of about 7 to 7.5%.
And the trigger that everybody is looking for is a rate cut from the RBI. But given the fact that monsoons are going to be slow, which means that inflation will be high, do you think we're looking at maybe a few more quarters of high inflation and failing growth?
Yes, we think that in the current macro environment, there is a very little case for a cut in the interest rates, and given that the government will be focusing more on giving some kind of a relief to the drought affected states, there is going to be a lot of pressure on the PSU banking space, because that is where the government can actually do something to put some money at work, and we think that overall interest rates will take a while to really come down.
Well, Hemang, help us put all of this into perspective. As a retail investor watching at home, what should be my strategy in this market? Now, there are a lot of investors who are nervous about what they're seeing. They're just staying away from the equity market altogether. Is that what you recommend?
Well, clearly the overall situation has not been that great, but one has to keep in mind that since January till now, our market has done relatively well. We have grown by almost 12 to 13%. And most of the news that we are talking about has already been known and to a great extent priced. And despite all of this, some of the companies have actually been reporting, good set of numbers, particularly something like, in the FMCG space, we've seen HUL and few other companies reporting good set of numbers. Cement as a sector has done extremely well. But yes, it is extremely difficult at this point of time to make a case for a substantial upside in the market. So if one is wanting to get into the market, I think one should be having a strategy to invest over a period of time on corrections.
So take this opportunity to pick up good stocks. But remember, as retail investors, we have to research the stocks that we're buying very, very carefully before we put any of our hard-earned money in. Stocks we must talk about this week, starting with Indian Oil, reported the worst ever loss for this quarter, because it's been selling petrol at subsidized rates and it has not been compensated. And the company reported a loss of nearly 22,000 crore rupees. Compare that to last year, the same quarter, it reported a loss of nearly 10,000 crore rupees. So it was quite a shocker for the street. We know OMCs as a group have been the worst performers on the Sensex this week as well. Hemang, what's your call on OMCs and Indian Oil in particular?
We believe that it was pretty much known to everyone that because of the huge under-recoveries and the fact that the government has actually not financed this particular gap through oil bonds or through any other means, they have reported losses. And also the fact that the government has not been able to do any price hike, and there is no possibility that at least in the immediate future they will be able to do anything. We think that even the crude price has actually gone up from somewhere around 95, 100 dollars per barrel to almost 112. So in this kind of an environment, we think that OMC as a pack will definitely underperform.
Now, we always recommend that retail investors stay away from sectors that we believe have a lot of policy volatility. Now, OMC is one such sector. Would you recommend that retail investors steer clear of the sector entirely?
In the near term, we think that politically sensitive sectors where policy and decision making is very crucial for that sector to perform, it would be much better to stay away from it.
All right, stay away from OMCs for this point. Bharti Airtel, down almost 13% since Monday. Bad quarter results, of course. Profit declined again for the third straight quarter. The market was not impressed. What's your call on that stock?
We think that, there is a lot of, pressure on the entire telecom space, and what has happened is that the top line growth is actually not showing any meaningful growth. And some of these companies which have done big acquisitions, like Bharti has acquired huge assets in African business, and it's taking a lot of time to, show any kind of growth at the operating profit level. And even the ARPUs have not seen any kind of recovery. So we think that the best of the time is behind them in terms of the regulatory environment. And these companies could underperform at least for the next 3 to 4 quarters till we see some kind of an improvement in the pricing.
All right, we'll step into a quick break now. On the other side, we'll turn the spotlight on the banking sector and SBI in particular. We'll find out what you should be doing to your stocks within the PSU banking pack. That's on the other side. Don't go anywhere.